Hello, everybody, and welcome to Chart Request Live, the show where you send us the tickers and we pull up the charts. My name is Alfonso de Pablos, Director of Research at Allstar Charts. And today I'm joined by my good friend Ricardo Sarraf, Technical Analyst at Allstar Charts. What's up, Rick? How are
How's
you?
everyone doing? Doing fantastic, man. Enjoying the beach, getting some nice color, nice little tan going on.
Where are you right now? What
I'm in uh,
beach?
I'm in Acapulco, in Mexico.
Oh, okay.
Yeah, nice.
Nice. Nice.
It's very nice. I needed the vitamin D, man. All the staring at our screens all year, man. I mean, it's been quite the year, hasn't it? I mean,
Right.
we have
I need it. I need it too, man. Hopefully next month in Miami, I will get some of that. So
hopefully, yeah,
I look forward for that.
we haven't had a single day off this year, man. It's just been, I mean, day after day, the market's been bringing us all manner of interesting stuff.
Yeah, that's right. And what's in your mind right now? What are you looking out there?
What's on my mind? I mean, should we do metals? I think the metals is overdone. Everyone and their grandmother's talking about metals. People that have, probably never looked at a chart of silver are now buying silver or talking about shorting silver. And I think that whole thing is overdone. Got to let those trends dance. But right now, I have Solana on my mind.
Okay.
And this pattern looks, you tell me, you're a CMT, my friend. You're the director of research. You tell me what this pattern looks like. This looks like classic distribution right here in the Solana USD pair. I'm looking at the 120 level. We've been keeping a close eye on this just as a gauge on risk appetite in the crypto space. And I know last night's session, the cryptos, and Bitcoin went above 90K for a little bit there. People got a little bit excited, but then again, we're back. We're back here, and this looks a little bit scary.
Yeah,
If
but
you're a
you're
whole,
spot on, Rick. That 120 level for Solana, it's the line in the sand. And even if you drop the VWAP from the cycle lows, from the 2022 lows, we are, that VWAP, it's right there at 120, 115. So that's a big level of interest, in my opinion. So look, if we break down and we complete this top, not good for crypto at all.
I mean, yeah,
So
we're talking about a massive pattern. This isn't a little tactical top. It's probably going to be a continuation pattern. We're talking about multi-year, maybe not multi-year, but if you go back to December of 23, we could call it a multi-year
yeah, it's
topping
a
formation.
big distribution pattern right now, with price, right at the lower bounds of that range. You don't want to see that 120 level, being violated to the downside.
Exactly. And right now I'm overlaying Coinbase.
Nice.
Coinbase is going to be that black line. Again, these historically, they
Yep.
trade tick for tick, man. I mean, you can't get a closer relationship than Solana and Coinbase. And right now, Coinbase is looking, pull that chart up. It's looking a bit vulnerable there. It's breaking we're not big diagonal trend line people around here, but when they present themselves in this fashion, we do like to look at them. And right now, this is looking a little bit threatening right there. That's just
Yeah.
something that's on my mind. The crypto space, it's not looking good. This is still the fourth worst year for that asset
Yeah, I
class.
mean, every time that Bitcoin, tries to, bounce from this level, it immediately got rejected, and it's getting tight. By the way, it's getting very tight. So I wouldn't be surprised if we see some action soon in crypto, especially in
Yeah,
Bitcoin.
yeah, that's pretty tight on the Straza, on the volatility squeeze indicator, on the
Mhm.
daily, and even on the weekly. You can just see the indecision there. Buyers and sellers just fighting it out at that level. Good call out. I
Okay,
can't.
I think we will see a resolution soon. But let's start with some tickers from our mailbox. So let's start with MTDR. Chris is asking us about MTDR, 1 to 2 year time frame, and let's compare it with ExxonMobil.
Matador. So this is what This is upstream energy. Is
Seems
it?
so.
Seems like it, but yeah, energy has been pretty slow to get off the ground. It hasn't gotten off the ground at all, rather. Let's anchor
Yeah.
a VWAP there. We're seeing a lot of this play out, like the COVID lows VWAP for a lot of these larger energy stocks has been absolutely key as far as support. And then these highs from November, December of 22. You also get some highs in 23 and 24. I guess it just depends on the stock. You're getting sort of a longer term VWAP pinch pattern coming
I,
in.
I love what you're doing there. Basically, you're defining two risk levels. One to the upside, one to the downside. Uh, yeah, on that 35 level, which also coincides with the prior cycle highs from 2020, pre-COVID highs. It coincides with that big one from the lows. So that's a big level. That's a big support level. If we
Yeah.
lose that level, nothing good happens for this stock. But if we reclaim 53, 54, which is the
Yep.
big one from the all-time highs, I think you can start thinking constructively for MTDR.
Yeah, I agree with you. The bias is going to be to the upside if you get above that 54, 55 level. Really key is that VWAP. You also have the 161 extension level. But
Mm-hmm.
again, 35 bulls really have to defend that. Buyers really have to step in. You got that prior cycle high from 2018 coinciding with the COVID lows VWAP. I mean, that is
Beautiful.
absolutely huge level to define risk to the upside, to the downside. I guess it just depends on your personal bias there. And you said to compare this to the Exxon, right? So we could
Yeah,
do
XML it's looking better. It's showing some relative strength lately. It's making its highest levels in new 52-week highs today, which is good. It's something positive, relative strength.
Yeah, this is a chart right here of Matador versus Exxon. And right now we can draw a clean level right there.
Hmm.
Little distribution on a relative basis, retest right there. So yeah, if you're going to be long energy, Exxon seems to be the better instrument at the moment rather than the Matador. I mean, we got that big base.
Yeah, I like the two setups, by the way. I mean, I like the base on base setup in ExxonMobil, but I also like that big web pinch in MTDR. I think some energy and fuel it's building and it's bringing out in energy. It's been coiled for you know
It's
three
been
4 years
for
now.
years. Yeah, look
Yeah,
at that. I mean, this is a monthly candlestick chart of ExxonMobil, and we're going to get the monthly close in a few days, right around the
I think we
29th.
will
So I think we
see. I think we will see some rotation. In 2026 in energy stocks.
yeah, I
I
mean,
think that's one of my bets for the next year.
I mean, right now, I mean, we've been playing at that space, and it's certainly contrarian at this point, but that might become consensus going into 26, especially if the other stuff stops working. And yeah, it would be an all-time monthly close for ExxonMobil. Good call out.
Yep. So now let's take a look at Spotify.
Ooh,
Well
Spotify.
done.
Good comms name. Let's see. Spotify.
You have a
Got
very
Spotify.
well-defined risk level there with the 161 extension from the 2021-2022 decline. So I think you can define your risk there.
Oh yeah,
Maybe
it's beautiful. Yeah.
also if you put a daily chart and drop a big one from the earnings reaction from November 2024, price is right there, right below. It's coiling in a nice way, to be honest. So any break at about let's call it 600. Any break at about 600, I think we can have a reversal to the upside in the
Yeah.
Spotify.
I mean, this has been just an absolutely monster leader, and it looks a whole lot like the Netflix, right? This has been just an absolute beast of a stock. It's given back. I mean, wait, let me separate my scales. Excuse me. Excuse me there, guys. So these stocks trade again tick for tick. You can't make this up. They one follows the other. If one leads, the other follows, and vice versa. These guys don't stray too far from each other. And right now, the Spotify looks a little bit better than the Netflix, but the Netflix is coiled, in a similar fashion to the Spotify. And I think if one of these goes, the other's going to follow. And yeah, I mean, let's look at the XLC for a second. This is the communications.
It looks really well. Very good.
It looks good, man. I mean, this is
and the sector itself has been consolidating right above that 161 extension. So as long as we're above that, 110, 111 in the XLC, I think the path of the resistance continues to be higher for the entire sector.
Yeah, no, that's a pretty big level right there. You're kind of in a no man's land coil right now between the 1618 extension of the COVID decline, the post-COVID, the 2021-22 decline, and then this little April sell-off right here. We fib that out, and that's exactly where the XLC stopped. And this is how a lot of the leadership groups look like. Right, looks similar to the Q.
Yeah, further confirmation. If we break about 119, 120, I think next leg higher for these stocks will be underway. But how about LION? Katie is asking us in July 14. Lion. What was that?
Oh, yeah, the Lionsgate. Yeah, this is a very interesting looking stock.
So Katie is, she's in 650, 6.5.
650 is her cost basis. That's pretty good.
Yeah, pretty good.
That's pretty good. I mean, someone called that.
And what I'm seeing in this chart is just a brand new uptrend underway, just starting basically.
Right there.
Framing,
very textbook, right? We've seen these play out in all sorts of sectors. I'm gonna, for our intents and purposes, I'm gonna ignore this situation right here.
Just ignored it. Yeah.
Exactly. Yeah, we're just gonna treat this as a SPAC base. You're already above the D-SPAC anchored VWAP by a lot, actually. I'm gonna fib this out. Let's see. We get the 38 and the 61. And you're kind of at the 50% right now above this level, which coincides with this 9 and 15 level. And momentum's going pretty strong, especially in this choppy tape. If we do relative strength analysis on this stock, I mean, it's just been murdering the S&P 500 over the past couple months.
This quarter, basically. But for me, Rick, the risk level and the line in the sand lies at that February highs around 9. That's for me, it's the line in the sand. That's for me is where this stock basically complete this bearish to bullish reversal pattern, and we can start, talking more about a new uptrend in this stock, basically.
Yeah, I'll have to agree with you. And as far as levels to the downside, I mean, I'm anchoring a VWAP to the D-SPAC level, to that high you mentioned, and to the all-time low. And they're all coming in clustering at the $7 roughly level.
Yeah.
So you got any meaningful pullback, and this is a pretty volatile looking stock. I'd watch that level if and when you do get a pullback. I mean, again, like you said, momentum is strong. This seems to be completing a base, and it's looking pretty good. Good.
Nice. No, this is a great chart. Nice trend reversal here. But now let's take a look at ServiceNow. Paul is asking us about our thoughts in ServiceNow in a 6 to 12 month period.
Okay, so this is one of those battered software names that Steve talks about when he says he's been gobbling up shares and battered up software names. This is a lot of times what these charts look like, right? These distribution patterns oftentimes coinciding with the 2021, late 21, early 22 highs.
Yep.
It's gonna be a little different on all of them, but this is a pretty good example, and this is one of the larger ones. And if we anchor a VWAP at the lows, October of 22, it's coming in right around where we're trading, maybe a few bucks off. That's a pretty big level. If you're going to be a buyer, I wouldn't touch it below this level. I don't know about you, my friend, but that's just what we learned.
Below the VWAP from the lows, around 145. Yeah, I will extend it a little bit. I will give it a little bit more room, until 140. That represents the prior cycle highs of 2021, and I will also draw a VWAP from the all-time highs, creating like a VWAP pinch there situation, which also coincide a 161 extension level from that Fibonacci extension from the 2021-22 decline. So I think you have two levels there to define risk. In the meantime, I think we're in no man's land. Messy for longer for this stock, potential distribution pattern, but until resolve lower, we treat this as a potential distribution at the end.
This looks bearish. This is leaning bearish, and you're already below the 163 level that represented those highs in early 24. So I just let this one dance. Let the institutions do the dirty work, right? Let the base form if you're going to trade it to the upside, and wait for those key levels. But this is a pretty good example of current state of large cap software.
I like it. Hey, Gerber he wants to take a look at Tesla. I love the Tesla.
I know you do, my friend.
I love the Tesla. You have like fractal patterns there in the monthly, in the weekly, in the daily, different way to define risk. It also depends on your time frame, right? I think that chart that you're showing is the chart. It's a very easy way to define risk for the Tesla. So
I'll have to agree. I mean, you have to absolutely treat this as a multiple time frame pattern, because it is. You have the 4 or 5 year base in the Tesla, and then you have a smaller 1 year base, and you published a beautiful chart just showing all the time frames in the Tesla. You have this 1 year base, right, going back to December of 24, and you also have this tactical 1.5 month
multi-week base. Exactly.
So we got the multi-year, we got the year, and then we got the little multi-month.
So I think with the Tesla, I think you can trade this one in multiple ways depending on your time frame. If you're more long term, you zoom out a little bit more. The 2021 highs is the line in the sand around 412. I think if we're above 412, the bias and the path of the resistance in general remains higher. If you zoom in a little bit more, as you're doing, Rick, and you want to play it a little bit more tactical, that 490, right, exactly where we got rejected, I think you can define your risk there. And if you're looking for, for a very short-term, swing trading trade, I think 470 is your line in the sand. So you have 3 levels there to define risk. One, if we break above 490, we were leaning more into conviction rather than timing in this case. So play with the time frame. Play with these levels. I think you have plenty of
exactly. I mean, if you're initiating a new trade, like you said, there's all manner of key levels to look at. But if you've already been long this stock, you just got to define your risk properly with whatever method works best for you. Trailing stops, moving averages, key levels, whatever it might be for you personally. But this is. Again, like we talked about the pattern leaning bearish in the service. Now this pattern is leaning bullish. I mean, on the longest of time frames, this is as bullish as it gets.
And look, the bigger the base, the higher in the space. The upside potential for Tesla is huge. I think this one, my bet is that we will see it 900, not even 600, but 900 over the next few years. I really like this base, and as long as we're above that 410 level, 412, 415, the passive resistance is higher, and I think you have to own it. And I think that's the way I'm playing it, at least personally.
Yeah.
But now let's take a look at the chat, the YouTube chat. Let's see who is here. Brian, Charles, Doug. What's up, guys? We already take a look at ExxonMobil, but now let's take a look at, Charles wants to take a look at TEAM, TEAM.
Artesian. Okay, yeah, this is one we gotta zoom way out. And this is quite the range right there, going back to August of 2019, my friend. This is again a pretty large pattern. I'd have to say leaning bearish, although this 145 level pretty big. You could get a bounce. You've had bounces in.
Look, I will tell you something that you will like, Rick. Drop the VWAP from the ultimate low or from the IPO.
Yeah. Oh, yeah. That's good. Yeah. Again, doesn't get cleaner than that. Doesn't get any cleaner than that. And get a little cute here. I'm going to fib out the entire extension off of the all-time low to the all-time high. And let's just see what we're working with as far as Fibonacci levels. And yeah, want to get it above. Like, again, if you're going to start a position, trying to swing trade this for, there we go. There's a percentage-based Fibonacci retracement, and the 38.2 comes in at around the same level.
I love what you're doing here. I love it.
Sorry?
I love what you're doing here. It's a great chart. The VWAP, the Fibonacci retracement, that polarity level, all of these three levels coming into place, a confluence of support. If you want to take a shot on the long side, I think it will make sense. However, I will just wait for, buy some strength above that VWAP from the lows. And if you want more confirmation and more conviction, at least in my opinion, if you drop the VWAP from the pivot highs from February of this year, you will have a level around 190. I think if we reclaim that VWAP, buyers will regain control of the tactical trend. So that's, for me, that's the way I'm looking at this stock.
Yeah, if we get very tactical, and that's a huge level, by the way. At 190, it's capped every rally attempt since that high, and you can see this is probably, if I had to guess, earnings reaction. Probably, you got a big sell-off, and then this has been just capping every single advance. Almost to the penny in some cases, right? That's a huge level, Alfonso. And you got this little tactical double bottom formation. You've had bears try to break it below, and then you got this nice little coil. Again, we're getting pretty tactical here. But you got to break above 67.
Yep. That's the right way to do it. If you're buying down here, I will wait for that confirmation and a break it above 1667. You have your risk level very well defined. 145, 133, that range. I think that works. But now, let's take a quick look at some of the ticker from the chat. Let's do it real quick. SCCO from Doug. SCCO.
The Southern Copper, man.
Copper miners, flying.
This has been a monster. Absolutely monster. Stuff.
Base and base pattern.
Yeah. You're basically trading at, you closed Friday at a new all-time high, and you're giving back two and 1/3 today. Like, you're giving 230 basis points back after what's been an insane rally. And we see these cycles play out. And I know you know this. I know a lot of people, a lot of our clients know this by now. You have the precious metals move first, industrial metals follow, then energy goes last typically, right? It doesn't have to play out in that exact manner, but that's, usually how these patterns play out. And that's been the playbook. Precious metals, I mean, again, it's like beating a dead horse at this point.
Yeah, so basically gold went first, silver, everyone's talking about silver, and copper seems to be starting to join the party right now, right?
Oh, yeah. Yeah, I mean, you got the breakout above the 161. Actually, no, this is wrong. Let's do that. Yeah, because I was doing percent based. So you're approaching a key level on the Southern Copper, which is $161, which is the 423% extension level after a breakout of a base on base, right? Double breakout pattern right there. And we have copper. I mean, I think it's important to look at copper futures, right? This is HG1. Excuse me. There we go. Yeah, these closed Friday at a all-time high, and they're giving back almost 5% today. Volatility day for metals.
But exactly the same level of the summer.
Yeah.
Interesting.
It's funny. Yeah, it's funny how nature does that. And we can look at the copper futures in the LME. Let's see what those look like. And yeah, we're going to get a pretty similar looking chart, right? You don't get that big pump and then dump. It was news derived, right? But copper is breaking out of a massive base, out of a massive pattern. Let's go back to the American one. Right, this is going back to 21. And if we go back, it goes back to either 06, 2011.
It looked exactly like gold in March of 2024, right before it broke out and started new like higher. Exactly the same.
Yes, that is. I mean, that's a great call out. That is an absolutely great call out. And yeah, we've seen the metals complex start to pick up, and Southern Copper's been definitely one of the leaders. You got stuff like Freeport McMoran. It's been lagging a little bit, starting to catch up. Stuff like the Eros Copper, ERO, I think, ERO, stuff like that, that are massive bases that haven't really gone. These bases haven't really gone in the same way that Southern Copper's moved. So if you're looking for a play, maybe bet on a catch up rather than on a leader. Again, it's up to you. That's just how I play it.
No, I like it. I love it. But now, Berkshire Hathaway. Put me that chart, please.
Oh, let's do it.
Chart. I know you wrote about that today. It's getting tight. It's getting very tight. So
yes, and it's funny. I have it marked up. At Berkshire, Warren Buffett announced his retirement right there, pretty much at the top.
Wow.
Which is, I mean, you can't make that up. I don't know if it was on the exact day, but around there, 2-3 days difference. And you really can't make that kind of stuff up. It's just how nature does things sometimes. And over longer time frames, it's getting pretty tight. You mentioned that. It's getting very compressed. And the XLF, this is the largest component in the XLF still, although JP Morgan's catching up pretty fast.
Yeah, it is a bellwether. Sometimes I like to use Berkshire Hathaway, of course, JP Morgan as its own index, basically. So the way Berkshire Hathaway performs, the overall market will perform as well. So I think that resolution that will come sooner rather than later for Berkshire Hathaway will have huge implications, especially for the financial sector.
Yeah, and again, the XLF is trading at, again, close Friday at a new all-time high. It's a few points away from that level currently.
Yep.
And Berkshire is not doing anything, hasn't done anything for nearly a year, right? So it's just an interesting setup. Definitely potential for a catch-up trade Or who knows, maybe it breaks lower and everything else catches down. That could also be the case, but have to see it play out first.
No, that's a great point. But Rick, let's take a quick look at two more tickers real fast.
Let's do it.
Wavy wants to take a look at BNS. BNS, Bank of Nova Scotia.
Yep.
I mean, it's been on an absolute tier, nice base, beautiful chart.
Yeah.
And then let's take a look. You will choose Hut, Roku, or CNC.
Hot. Let me think about that. But let's take a look at. Oh, that's a pretty hot list right there. But let's take a look at the Bank of Nova Scotia first, and this is one of the big Canadian banks. And I was actually inside their building with Phil Perlman when we were in Toronto, and it's a beautiful, beautiful building. It's like a copper-looking building, and on the inside, they have all sorts of cool stuff. Beautiful building. If you're ever in Toronto, highly recommend it. If you're into architecture, this is a beautiful building. But it's breaking. It's at a key level right now. And let's just treat this as its own base, and then we can zoom out. We have a level around 74, 75.
Mm-hmm. And 75, that's the level.
Yeah, that marks the breakout. And above that, you get 95, 96.
Mm-hmm. Yeah, I think in the short term, it is extended.
Yeah, it is.
But you have your risk very well defined. That's what I like about this chart.
Yeah, this is as clean a level as it's gonna get, man. Like, you can zoom all the way out and treat it as a larger pattern. This has been an absolutely monster range for 20 years, almost 20 years.
Yeah, that's massive. That's a massive base. That's a massive base.
That's huge.
Yeah, and we're seeing the same pattern. Either it is a potential breakout to new all-time highs from a monster base like this one, or for example, the Citigroup making new multi-year highs as well, completed a random bottom formation. But the strength in the banks in the banking sector worldwide has been so hot right now, right? So European banks, international financials, international banks have been a hot spot this year, one of the best performing sectors and groups this year. And Canadian ones are one of them. And I think the recent performance since the April lows for BNS, it's a great way to show the theme.
Yeah, I mean, this is a monthly look at the BNS. You're getting a RSI rating of 72.5.
Yep.
On the monthly. You haven't gotten to this level.
Well, I mean, highest level since 2007. Wow, that's interesting. That's really interesting. I think we're looking at a massive base breakout in banks in general. But Rick, let's finish with, you will choose Hut Mining, Roku, CNC. Which one do you like?
Okay. So I think
you know my answer, by the way.
Oh man. We've already spoken about crypto, so I think the Hut would be a little bit redundant, although I think it's noteworthy that it's showing relative strength in the face of all the bad news and all the bad price action in crypto. And that's mainly due to to their exposure to data centers and compute and whatnot. But I think the CNC is probably the most interesting looking pattern. We traded this one for the breakout multiplier.
I like it. And I like the setup, filling that gap from, July the 1st of, this year. It's getting tight. I like the setup.
Yeah, I mean, we thought it was going to go. We thought it was going to go earlier in November, and it didn't. But it's still coiled up. And if we throw a volatility squeeze on this, you just see how tight it's gotten. And even after this massive expansion and volatility to the downside, it's compressed so much on the weekly, and on the daily you can see it too. I mean, you got to close above 41, 42. And I think you could get that squeeze back to the mid 50s.
Yeah,
Right?
there is a nice setup there. So wait, what's the risk level? It should be around 38, right?
Like for the like as far as defining risk to the
Yeah,
downside,
exactly.
38.
Where
Yeah.
will you define risk? 38,
Uh, I mean,
40?
depends. I mean, listen, if you're going to be playing this with calls, which I think this is either a leap setup or maybe you just want to throw a few of these shares into an IRA and not think about it for the next decade. And,
Look,
that.
I think the setup, well, at least for me, it's just trying, betting that this guy will get filled.
Yeah, I mean, again, we have this VWAP from the IPO back in 2001,
Yeah.
and this is the first time we've been below that level since 2010. So that's pretty notable.
Mm-hmm.
We zoom in, yeah, I think 36. You get below that, you get a
Okay.
little bit messy, but I think that's my level for the CNC. But 41 below 36, that gives you a little bit of play.
Okay, I like it. I like it. It looks, in the short term, like a potential reversal base and filling that gap. So yeah, I like the chart. So before we finish today, what was your favorite chart?
Oh man, that's always the hardest question of the day, man. I really can't say. I like the Bank of Nova Scotia. Not doesn't mean that it's the one I'd be most likely to buy, but just because it speaks to the broader strength in the global financial space. I mean, you have European financials looking crazy. I was looking at some of the French banks. They have OTCs because a lot of them they don't have ADRs, but they're pretty liquid OTCs like the Credit Agricole, the BNP Paribas. They look pretty good, man, and the Canadian ones look pretty good. And
Nice.
you just look at financials and they're leaders, man, for the first time in a very long time.
Yeah, I think one of the most bullish piece of evidence right now, it's looking at the equally weighted financial sector making new all-time highs. I think that's very bullish. But for me, the chart of the day is the Tesla. I like that multi gear base and the different way we can define risk and trade this stock right now. So I really like the Tesla setup. I really like that chart. So that for me is the chart of the day. And guys, that's it for today. Chart Request Live. Thank you for hanging out with us and sending your tickers. We will be back again next Monday at 1 p.m. Eastern Time with more charts. So thank you very much, Rick. Thank you for joining me today.
Thanks, man.
See you guys next week.
Pleasure. As always.